Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look at the Forex market, but today probably makes no sense to talk about euro currency, as there you can see nothing interesting is going on, and market just waiting for European Central Bank meeting, turning to some sideways action without any performance in any direction. So yesterday we talked that euro could drop a bit more and trying to complete the euro standing support. Market has made the attempt to do this, but still it hasn't quite reached the predefined levels for a few pips, and then turned to sideways action. So currently, well, at the eve of the meeting, I do not see that makes sense to make some forecasts or prepare to something, because anyway we can't foresee what definitely Christine Lagarde will tell, and the major intrigue here stands around whether central bank follows to its neighbors. So following the United Kingdom Central Bank, Bank of England, and other rivals who already given the clear hints that they intend to raise rates, following the Fed that intends to do this a bit later. And currently, as I said in the weekly report, that European Central Bank looks a bit as a white crow, so because they actually stands lagging behind all the central banks in this topic, this subject. So we will see. Meantime, from the technical point of view, it is interesting to take a look at the Canadian dollar. We very rare taking a look at it because it's not our basic currency for analysis, but sometimes in some circumstances it becomes really interesting, especially in the long term. So what I would like to say is that first we will take a look at the monthly chart. So as you know, Canadian dollar is also coming to the policy change. Crude oil currently hits all records and returning back to the pre-pandemic levels, costing above the $85 per barrel. So it's really high prices. And it's clearly impact on price, on value of the Canadian dollar, which also increased the inflation expectations. So as crude oil is becoming more expensive. Based on the technical picture, when I take a look at it, the first thing that I come to as a conclusion is that Canadian dollar should rise more. So I will talk in the terms of the chart. So when I said that price should drop and Canadian dollar should drop, I mean the price behavior. So it means when I'm talking about downward action, you should understand that we are talking about the rising of the value of Canadian dollar, because we are trading United States Canadian dollar, not the Canadian dollar, United States dollar. So it's a bit wise opposite relationship. So that's obvious. And when I'm taking a look at it, it seems that market has the bearish view and it should keep dropping. Why? Because take a look, we have strong thrust down by the market mechanics. Just keep an eye on it. Acceleration. Then long-term retracement has followed in the shape of the ABCD pattern. Market has completed ABCD type of action to the upside. In fact, we've got the bearish catalyst triple to sell, right? The minimum target of this pattern is, the 30% support of the whole upward action of the free drive, of the 222 pattern. And it's already has been completed at this point. So here, market hits in 2016, the 30% minimum target. Then, when the reaction on the bearish reversal pattern has been completed, market has tried to keep going higher, with the Canadian dollar was losing value and a drop on the crude oil prices. But this action has been fizzled and market returned right back down. So it means that attempt to change the basic trend here with the and ignore the reversal pattern just to work out the minimum target and then returning back to the upward action has failed. And market returned back to the 30%. This looks bearish, and it means that in the longer term, based on this dynamic, market should go lower to the next at least support or maybe some different level, currently we could speak about possible 112 area in a long-term perspective. Then I have checked for any news and opinions concerning the Canadian dollar and concerning other hydrocarbons currencies, which is Norwegian crown, it's Russian ruble. So, and I have found the opinion of the Goldman Sachs on the subject. So I will show you. This is on the CNBC. Here's the headlines dedicated to the ruble, but in fact, the Zach Pendle from the Goldman Sachs talks about on oil-linked assets in general, and Canadian dollar not an exception. They expect. So I will give the link in a video thread, so you could watch it as well. This is very short-term videos, 3 minutes. So he talked that they expect, Goldman Sachs expect, continuation of the rally in 2022 on commodities, and basic commodities, in the copper and the crude oil. So they think that this will become the year of the crude oil. That's why they pay special attention and increase the amounts investing in emerging markets that has a link to hydrocarbons, which is a Russian ruble, and as well they're watching for a Canadian dollar. So this is indirectly confirms the suggestion that Canadian dollar also could rise in value in a long-term period. That's what about the technical situation, and it is needed to explain that you could see the picture in general. Now let's take a look on the details. In details, with this recent drop, we've got the Brent bottom sell pattern. We talked about this earlier in the summer. I have prepared the video on this subject. Trend stands bearish currently on the monthly chart. Here we have the Brent bottom that mostly is done already because market already has shown the 618 level on the daily chart. Its minimum target has been completed, but with the overall background that we have currently, the appearing of the Brent bottom doesn't mean that market should stop right at the minimum support area. It could keep going further to the downside. The Brent bottom could become the pattern that could trigger just downward continuation. This also very, very often happens on the markets. Something of that sort. So you can see here it's thrusting up, retracement in the way of the Brent bottom, and Brent bottom becomes the upper continuation pattern that just lets you to step in on the long-term action. So here it could be approximately the same thing. At least we should keep an eye on it. Dropping lower time frames to the daily chart in particular, here we have that the background that recent. Here's, by the way, the 618, the target of the monthly Brent bottom has been hit. With the daily pattern, we have another minor thrust here. It's also has completed the target because it's XOPU, this ABC top pattern has been completed, creating the increment support with this level. And theoretically, this thrusting action is suitable for Jordan-Napoli reaction. Since we have the long-term support here, which is also monthly support, it's daily support as well. So here, logical to suggest maybe appearing of the double repo pattern or something of that sort. Whatever it will be, we could keep an eye on the possible pullback. So once it will happen, it is possible to consider taking the short position, I suppose, because weekly trend is also bearish, and we could fade bullish daily trend around some of the fib levels for a possible taking the short position with the downward continuation. So additionally, if you're a scalp trader, you could consider separately the pattern if it will appear here. And for example, double repo could be traded on the long side as well, if you very short-term trader. But for those of you who trade on a daily, weekly basis, here you need to search chance to go short. And with the forming of the double repo, and the market will climb slightly higher back to say 25.35, 25.50 area, somewhere in this level, it might be considered for taking the short position, depending on what the style of the action, what the shape of the retracement will be. Maybe market will form some clear shape of the ABCD retracement. That will be much better. So that's in general the situation that we have for Canadian dollar. Some patterns could be formed in the near term, but what is more interesting is the chances that hopefully we should get for possible taking the short position for a longer term perspective.